Hello and welcome to today's Dalal Street Week Ahead video. Now in today's video I'll take a look at the Nifty IT Index, I'll take a look at HCL Tech, and I'll take a look at Wipro. I'll take a look at all three in terms of what equity traders, option traders, everyone should assume from the indexes and the stocks to sort of gauge the next move and make a profitable entry and exit. Now before we go ahead in that, let's take a look at the news affecting our markets this week. Now on Tuesday we have the PMI data of India coming out, US all, so that's going to naturally affect the market slightly. Why I say slightly? Because they've completely got overshadowed by the H1B visa issue. This year the H1B visa issue has been brewing in the news cycle from last night. The goalposts are constantly changing. $100,000 sometimes comes to one-time fee, sometimes comes to a yearly fee, this, that. So there's a lot of rumors going on. But I believe all of us who are trading have seen this same thing happen 2 weeks ago with weekly expiry. CNBC would post a different thing about weekly expiry. New NDTV would post a different thing. Economic Times would post a different thing, and just put unnamed sources and do what they want to do with the rumors. So those rumors, I believe, are going to cause a lot of sort of volatility to enter in the market tomorrow in terms of box range volatility. Because let's say it wants to decline further, and then a sudden this type of thing comes, causes a small upswing, then comes down. So expect the down moves to not be clean. And for example, for my positions, me and clients hold CE cells in the Nifty and we hold them in the Sensex. They were in a profit, and naturally this is even going to help them further to enter a bigger profit. But why I would not sort of close them is this will keep constant pressure and help decay. This is even if there's any up move now, according to me, post open, it will be sort of curtailed and kept within a range. So I'm expecting sort of a new box range to form in the Nifty, Bank Nifty and Sensex, and a clean move will not be coming that easily in the bigger time frames. Naturally in the 5 minutes, 10 minutes, 15 minutes you will get them. But in the bigger time frames of hourly, 3 hours, daily, you're not going to get those very clean moves in a continuous manner, sort of. So that's how I look at the news cycle and how the headline indices may trade in the coming sessions. Now let's take a look at the two stocks in the index. I'll start with the Nifty IT Index, then I'll go to Wipro, then I'll go to HCL Tech. Now coming to the Nifty IT Index, I'll have to zoom in a lot because you can see it's a box range. It had a long-term decline, and I was explaining that it has entered the range. Now according to me, now the range is going to even narrow further, and now tomorrow naturally we do not know exactly the number at which the index will open, but most likely it's a bearish open, and due to that I will drop to the hourly chart to explain it in a better manner. Now, according to me, as long as the index is between 36,100 and 37,220, this is the small box range, and then 35,680 and 37,220 is the big box range. So technically within this big box range, you can expect the noise to happen. The only fresh decline will completely start if we break this support. So my trading plan is pretty simple. When I'm looking at, I'll naturally use the Nifty IT Index to guide me for the stocks of IT sector. If the Nifty IT Index breaks 36,150, it's a short to 35,900 and a short to 35,680. This is a very strong support. And if this breaks, then it's going to 35,150 and 34,800. But the main thing is if this breaks, the Indian IT stocks will start a fresh decline, which will take them at least 10 to 15% lower over the coming weeks, minimum, maximum up to about 20 to 25% lower. That's how I look at it. So this breaking is going to be very bad for the IT stocks, and if this one also breaks, then it is. That's why I gave a range. Let's say the first 10. If this breaks, it will sort of give the first 10% of down move in the IT sector. If this breaks, it will extend it to around 20 to 25%. That's how I look at the IT stocks. Naturally, down the road, as I said, there's going to be a lot of opportunities in the IT sector, but It's gonna have to be, you're gonna have to be patient, wait for it to happen. But anyone thinking that I'm gonna buy now and catch the falling knife successfully, I don't think it will happen. You might might have a dead cat bounce for 1 week, and then it will make you lose double in the coming sessions. And as an equity trader, you don't want that on the whole thing. F&O traders, I think option sellers especially are going to get a lot of opportunities now coming in the IT sector. Naturally, they're going to be very high risk opportunities because everything is going to be based on news. Sudden news comes from America, all your positions can be messed up in the IT scene. So that is another factor that everyone will have to watch. Now we've done the Nifty IT, let's take a look at Wipro, and then we'll take a look at HCL Tech. Now Wipro, if you look at Wipro's chart, it's literally like you're looking at the Nifty IT Index. So I look at it in one way, is that as long as it is below 263 and above 250, again, this is the box range, which is also present in the IT Index, the small box range. The big box range is between 238 and 263. Because it is literally an identical pattern, because unfortunately, well, let's say when we look at the Nifty, Reliance has been given too high weightage. In the IT Index also certain IT stocks have been given too high weightage. So that ends up causing very similar charts to the indexes. Now, my trading plan for Wipro, since we can trade it, is if it breaks to 50, then I'll sell calls very aggressively of September, of October. Why I would even go for October? Because, like I said, there will be a gradual decline. Yes, there will be bounces along the way, but I believe there will be a gradual sort of decline, like how I'm drawing on the chart. So call sellers will end up making more money if they take a more aggressive approach, and naturally there's going to be rumors that are going to come. People are going to go to court for this H1B visa and everything, and those will cause temporary spikes. But as long as it is below 263, I don't believe there's anything to worry. If it breaks above 263, then the IT sector has a shot to rise. So that's how I look at whether it's Wipro or the Nifty IT. So my trading plan again breaks this, it's a short to 242 and 238. If it breaks that, then it's a short to 242, 238, it's a short 232, breaks that 226. I am bearish on the IT sector now. I was waiting for a trigger, and I think that trigger has come, which will allow the stocks to fall. Any up move I'm going to use as a chance to short. I'm not going to consider any equity right now, because yes, it will help offshoring and everything in the long term, but it will first have to fall a bit more, then you get that help. Now let's take a look at HCL Tech. Sorry, I opened the BSE. Now when we come to the HCL Tech, HCL Tech is naturally a cleaner move than Wipro. It's a cleaner trade. It will be an much easier trade than Wipro to do. So according to me, if you want an easier trade, then look at HCL Tech. If you want a harder trade, then look at Wipro. If you've got a lot of capital, then you'll naturally want to enter everything. Now, according to me, as long as HCL Tech is below 1538 and between 1410, this is again box range zone. Again, the same pattern is playing out, small box range and the big box range. So now, how I look at it, Monday morning, due to this news, HCL Tech will open somewhere around this point. If it breaks 1410 to 1423, then it's going to fall to 1360 and 1320. Naturally, because of this being a very sharp decline, there will be, as I said, dead cat bounces. But still, C sellers, I think, have a good opportunity in the coming week to make some decent amount of money. And also now we are not far away from the monthly expiry of September. So the decay factor will be fast, because these is generally in stock options. The decay factor has come very slow, and that issue will not be there as we are coming very close to the monthly expiry of September. Wipro is something I can consider doing option sell, like I said, in September, October. But HCL Tech is something I would want to sell September 1st, then I would want to sell October later, because of simply how the chart is, I think the dead cat bounces can be stronger in HCL Tech than they can be in Wipro. So they will put you under more pressure if you're on the wrong side for some, let's say a week, than Wipro can do. So that's it for my view on Wipro, HCL Tech and Nifty IT. If you liked the video, then hit that like button, subscribe to the channel and click the notification bell. Thank you.